All right, then it's a good afternoon again. Of course, we get into the market movement this time around. Asian markets have certainly tried to find some positivity, and they tentatively did move cautiously high. Of course, this follows on from Donald Trump's impeachment as president of the United States out in the USA. That is the second time now that Donald Trump has been impeached, particularly by the House of Representatives. That move now goes to the House Senate, and they will decide officially if he does get impeached. That is only going to happen, however, after Joe Biden is actually sworn in as president of the United States. What this effectively does, though, is that it would effectively make him unable to stand as president of the United States again in 2024, if that was to be the case for him. So it is quite interesting. And market reaction to that has been fairly muted, with some positivity. The expectation, though, is that the Democrats will perhaps put in a little bit more in terms of a stimulus, perhaps, into the global economy. If that is the case, then markets are certainly going to go higher and higher. So green for the most part out in that Asian trading picture. Only the Shanghai Composite going down 0.9% by the close of trade today as well then. But the Nikkei going higher, the Hang Seng enjoying some positivity too, as we see the tech count is also faring fairly well despite the continued ban on a few of those companies as well. Chinese military linked companies have also been under fire. Donald Trump also putting in a ban on those companies, meaning that just as he leaves office, there will indeed seemingly be a ban on the Chinese military-linked companies, and that's trading out in the United States. So it does change things up a little bit. Positivity, though, for the European market picture, 0.2% higher for the FTSE 100 out in London. So some positivity all across there. Pretty much the same picture all across Europe. That has filtered through to our local market as well, which has gone up nearly 0.2%. There is some negativity, though, and it doesn't mean that there's complete risk off trade. Risk on trade, should I say, but it does mean that the market is looking to some positivity more than anything else. Industrials have gone up 1 2/3%, and that's the biggest leader today. As I said earlier, the tech counters seemingly finding a break in this market picture for now. So the likes of Tencent, the likes of Alibaba going higher out in China, which means locally the likes of Naspers, which of course have a share out in Tencent, also then move in a positive direction. If they go up, so too does the likes of Process. It moves industrials up, and industrials occupy about a quarter of South Africa's share portfolio, the total JSE picture. So it's quite a big chunk of the market movement here on the local side of things. The South African listed property segment is also the only one to have gone up today, going up 0.4%. In terms of negative counters, well, take a look at that. Financials suffering there around 0.5%. The banking counters being the big fallers there, around 0.48% as well, with resources also going down only just because diversified miners did manage to go higher. It's just the single commodity miners which are unfortunately struggling. Gold miners going down more than 4%, platinum miners too following suit. Speaking of those negative counters, Anglo Gold, Ashanti, Goldfields, Pan-African Resources, all of those going into negative territory today, and that is a risk trade that seemingly has filtered through into that market picture for now. There is some positivity, though. As I said, Naspers, Process, both up nearly 4% each in today's trading picture, noted because of that positivity coming through from the tech counters out in Asia. Sun International has also gone higher today, so too has Mediclinic. Let's turn our attention then to the local currency. As I said, there is a little bit of risk on trade by the seams of things, some weakness perhaps in the US dollar, but some strength then locally as we see us going up. 0.7% is the local currency. We're now at 15 Rand and 12 cents against the US dollar. That sense of sustainability for the local currency is going to be difficult to maintain, though, because it does seem that if there is more strength and more perhaps coming through in terms of stimulus for the remainder of the global economy, then perhaps you may see our local index going a little bit weaker, unfortunately. Against the euro, 18.39, 20 Rand and 64 cents then as well for a British pound. Onto the commodity front very quickly as well then. Brent crude slightly lower. Big concerns around demand there as well. Whether that will continue to be the case is a question for the market itself, though, but it is a second day down for the Brent crude oil price. Platinum has gone higher with some demand, so too the gold price, and interestingly enough, Bitcoin going up 2.5%. So certainly very interesting sentiment here as well. The market picture is going to focus a lot more on what happens out in the United States. The Fed saying out in the US that perhaps they may keep interest rates lower for longer, but the growth picture won't happen as quickly as some would have hoped for. Of course, even locally, you saw the likes of Moody's actually saying that South Africa is going to struggle with high debt, low revenue, meaning that it's going to take us a while to get back to even 2019 levels. In fact, they believe that with a 4.5% growth rate in 2021, which is of course higher than the World Bank's growth rate, they see South Africa returning back to 2019 levels in 2023. We'll certainly see if that really does come to the fore. Let's chat about all of this and what it actually means for the market. Then Jamil Ahmed is the Director then of Investment Strategy at NAGA. Jamil, thank you so much for the time. A happy new year to you. Indeed, we sit atop of the table, but top of the news actually is certainly going to be Donald Trump's impeachment and what that means for the market. Is there any major move to that? Is that something that sort of investors will look at and go, well, it changes policy somehow?
Happy New Year, thank you. Now, if the current president had won a second term, or if he had not conceded defeat just last week, this impeachment would have been a far bigger deal for markets than in reality what it is. What it is in reality is a political story. And the most important thing is that this political story does not overshadow the incoming president, Joe Biden, who will be inaugurated in less than 1 week's time, his ability from implementing campaign and economic policies, including stimulus, to help the U.S. economy and as well as globally away from this pandemic. If that would have overshadowed this, then it's going to be a big problem. Think of it as a metaphor. Our favorite team's doing very well at the moment. We're top of the league. If there's rumors about one of the players being unhappy, which we all know is the case with Paul Pogba, if that was unsettling the team from its performance, it would have a dramatic impact on the team. And we can say the same about this situation with the presidency. Should the impeachment overshadow Biden's ability of the team of the U.S. economy to perform and to release stimulus and to improve matters, then there'd be an impact to performance. But as it stands, they seem to be not directly connected.
But Donald Trump is not to be outdone, right? So he'll certainly find a way, and he looks to be trying to find a way, particularly when it comes to the Chinese military-linked companies that he's trying to ban from the trading out in the New York Stock Exchange. That's bound to hurt tech counters in the long run, though, surely. And I mean, it's something that perhaps Joe Biden would find difficult to reverse, considering the impact that some of these entities have had. Do you think investors will take a look at the tech counters and say perhaps they've run too hard now?
Globally, they have to do so. Following the events of last week, it's only exacerbated the issue. We already knew that regardless of the US-China trade tariff tensions and the trade war over the past couple of years, that Democratic lawmakers are extremely strict on having an accountability of the tech giants, why they hold monopoly power, and trying to break that up. And I think that even with Biden coming into office next week, with Democrats now holding the House, the Senate, and basically having the most influential power on the political system, that these tensions will still remain. And I do not think that necessarily the US-China relationship will change that much with Biden as president. It just happens to be that with Biden as president, there'll be a more diplomatic tone and hopefully a collaboration to try and improve things. But it does not mean that US and China, the issues of the past couple of years, are going to fix overnight.
Yeah. Where does this leave emerging market currencies, though? I mean, we've seen a little bit of strength out of the dollar, and then we saw weakness a little bit as well. Then today, the Brazilian real is possibly the weakest emerging market currency so far this year. But that's followed very closely by the South African rand as well. So some weakness in that emerging market currency space. Does that continue for the foreseeable future?
I'm not concerned about it because we're just in the second trading week of January. I think if you look at the rand in its perspective, it's still risen close to 7% over the past 3 months. I mean, the rand was returning to levels I hadn't seen since the pandemic. And the train of thought is, generally speaking, that the dollar's having what we call a short-term bounce. It had a very significant weak period over the final 6 months of 2020. And we don't see this outlook changing in 2021 unless this pandemic lasts much longer than we all hope it will. And hopefully, fingers crossed, that's not going to be the case. So I still think that 2020 we're looking at a lot more dollar. In 2021 we're looking at a lot more dollar weakness. We do think the dollar weakness and the dollar index could hit levels closer to 85, which means for the South African rand and its emerging market peers, including the Turkish lira, Russian ruble, Brazilian real, just to name a few, we're looking at these currencies not being able to strengthen to levels they haven't seen in years. For the rand, this could mean 12. It could mean 11. But we need the perfect storm of circumstances to line up in particular fashion.
Fortunately, we haven't always had that perfect perfect storm of situation, unfortunately. That's very true. $60 a barrel. Does the oil price get there very soon? I mean, it seems that demand issues are the big thing here, and Saudi Arabia last week trying to put those to the side a little bit.
This is what the market's pushing for. We haven't seen oil price above $50 since February of 2020, and now we're getting very close to US oil heading towards 55, which means the Brent crude will hit 60 at some point. That's definitely the target. It's a magic number. Like the magic number for Bitcoin seems to be 50,000 at the moment. Now, whether it can hit that level really depends on the Saudi Arabians and the OPEC plus producers really trying to stem the fears that this pandemic, the second variants, and the different variants that other countries I've seen, such as Brazil, over recent days, that not impacting global economic demand and productivity in 2021. Sure. As long as that doesn't happen, oil prices already priced in all of the negatives from the pandemic as it stands, which means that the outlook can only look better above $50.
Sure. Certainly hope. Let's see how things fare. Thank you so much for the time. Jamil, always great chatting to you. We'll continue to do so throughout the year as well. Jamil Ahmed is director there for investment strategy at NAGA, then joining us to unpack that market picture. Well,